mentorship call. But this is a special one with someone who's crushing the markets on a day-to-day basis. He achieved the rank P5K and leads hundreds of people within the trade house movement. He is one of the newest and most rising Go Live educators on the platform right now. But he has been educating his team already before he became educator. So he has a lot of insane value for all of you guys. So if this person speaks, you better focus and listen very carefully because his value, his mindset, his 8+ years of experience and eye for the markets will make a crazy impact on all of your trading journeys. Take your notebooks and pens out to make sure to take all your notes all the way from the East Coast and still made it happen to be on this call for you guys. So better put some major respect on his name. So guys, are you ready for the value of the smart money sniper himself, the one and only Mr. V, aka Valentino?
Yo, what's good? What's good? Yo, what's good? What's good, Netherlands? Yo, appreciate you having this call. Hope y'all are ready for some some gems here. Really and truly, to just kind of get an idea of where, everyone is with things. I just want to know a little bit about y'all, as far as is anyone on here? How many people's on here has been trading for more than a year? Drop a 3 if you've been trading for more than a year. Okay, cool, 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 cool. Cool, cool, cool. All right, so drop a 9 if you've been through my boot camp or if you've ever seen the bounce back boot camp. Okay, cool, 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 cool. All right, cool. So you guys are pretty caught up. Bet, that's a bet. So what we can do here today is we could really do a Q&A. I know a lot of people reach out to me for questions. And so I just want to know, you guys could ask me questions or drop in the chat, what you feel like you're really struggling with in your trading journey. And if you're new to trading and you haven't been trading for more than a year, that's fine too. Um, but if anyone has been trading for more than a year or even just a couple of months and you feel like you've been struggling or there's just some things that you want further clarification on, just drop it in the chat and I'm just going to, in the meantime, while I wait for that, just gonna flip through some stuff here real quick. Yeah, Snaz was clean. And you guys really want to take this time because I mean, it's like when it comes to the boot camp, the boot camp really does go through step by step of exactly what it is that you want to do when coming to your charts. And so a lot of times it's really just, fixing the little things, the little nitty-gritty things that will just make things click. So if y'all don't have any questions, let me see. Flip through Aussie here.
Yeah, I just told the Germans if they don't know how to ask in English, I'm a translate for them. So
Okay,
you never
that's
know
a
how it
bet.
is trading in English, you know what I mean?
Yeah, no, definitely, that's a bet. Appreciate you.
And Gio will do the same for the Dutch squad.
All right, that's a bet. Appreciate you. Appreciate you. Yeah, man, this UCAT is just freaking nasty right now. Honestly, UCAT, this is something that I mentioned on one of the sessions. And I feel like this is really a perfect example of just what it is that I wait for and that I look for. Just like I was talking about it with Siva earlier, like UCAD is literally a perfect example of what we mean when we say the market being fractal, right? Uh, 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 a okay, yeah, for sure. Go ahead and shoot, my guy. Go ahead and shoot.
I have a question though while we wait for that. Maybe it's something for later on, but we had this kind of discussion today in our group chat. It was on the example of gold, like it created a big all-time high. And how do you trade those pairs when there's such a big range because of news? Or do you think it's still eligible to look for internal break of structures, or you really want the overall structure, let's say before the news happened yesterday on gold, wanted to break that so it's a confirmed break of structure? Or how do you handle that in any type of pair?
So as far as you're talking about for like FOMC, was it?
Yeah, it was yesterday was FOMC, and then today was yeah, I think it was FOMC, or the day before that. Yeah, the day before that even, when it popped off like a couple hundred pips.
So when this happened here,
Oh, by the way,
oh
you
wait, yeah, I remember that.
be
Got you.
able to share the screen now.
Cool, cool, cool. Got you. That's a good question. So personally, for myself, with news that is really volatile, um, I don't like entering right before it. If it's a red folder, but it's not like something that's I guess that is as important, then I have no problem entering before. But when it comes to like CPI, FOMC, these certain um big news releases, right? Like the federal funds rate, PPI, these really heavy ones. I don't like to enter before because a lot of times spread can increase on, whatever broker you're using, and you can get a big move in one direction that could hit you out, and then it does the move or whatever the case may be. So I really just treat news, and it's like being aware of news. Sometimes it can psychologically psych you out from taking whatever move, but I really just like to treat news like any other day. And so, like, when we had this happen and, gold spiked up first here, this is something that I talked about on the FRX stream, right? I pretty much wanted to see gold come into this 2033, right? But I was afraid to short it just because it was going against the overall, trend and momentum. So I didn't want to short it, but I was thinking we could get a rejection from there if it did pop up, or get a rejection from here if it pops down. So like when I get that initial move and then news starts to settle, then I'm just waiting for the same thing that I would, wait for to get in on any other given day. So like instead of trying to participate in this and catch this or whatever the case may be, I just looked at the overall trend and the overall structure, and like to me it's like, okay, well, based on the 1 hour, that was our range. We came into a candle that was here, all right, and then I just waited for price to, break structure. And then once it did that, it's like, okay, well, now at this point it's just a regular setup. Like that initial move, like when news happens, it can still bring us volatility later on in the day, but that initial move is usually the most riskiest one. So I typically stay away from that. And if it doesn't give me this, then I'm usually not going to be in the trade. Even when we had, what other news was that? What day was that?
Yeah, it was FOMC, then NFP news today, and then
There was
I think
another one.
CPI or something, wasn't it?
Yeah, there was another one.
So you basically respect the overall structure it gives you even before the news and everything, and if it doesn't break out of that range of structure, you're not doing anything even afterwards. Like you're letting it be for a couple of days to give a quick, clear structure.
Yeah, exactly,
Okay,
exactly.
good.
It was I think it was unemployment claims. But this one's not really as crazy. Sometimes it can be unemployment claims. Um, but like even that one, I just waited for price action to develop. And that was on Thursday, which was the 4th. What was it that I traded on Thursday? I think that was around when we first got up in here. No, that was the second time. Yeah, but even on Thursday, like when we had the unemployment, it was this here. But that one's not like really as volatile from the initial impact, like the initial release. But I just waited for price to break down, and once it did, that's when I positioned myself, you know, instead of trying to catch from that initial spike if it does do that. So yeah, that's how I handle that. It's a good question though.
All right, appreciate it. And then we got some in the chat.
Let me see. Someone says you use the same confirmations like Siva. I don't know what Siva's exact confirmation list is. But yeah, I look for market structure first. My confirmation list, all right, is market structure. Then I'm drawing my fib. Once I draw my fib, I'm looking for any liquidity or imbalance. IPA is imbalance price action or inefficient price action. Then I'm looking for my institutional candle. And this is the like backbone of my setup here, and then everything else I
Is everybody else still there? Yeah, I think we lost him here for a sec.
Yeah, we did. Oh, damn.
I think his internet probably popped out. He's still there, V.
yo, can
Okay.
you hear me?
Yeah, yeah. Wait 1 sec, let me. Oh yeah, you pinned still. And we still see your screen.
All right, that's about. Let me see. What's this that Kev dropped? IPA is imbalanced price action or inefficient price action. So that's Civa's confirmations. What is institutional area? There are two criteria in order where liquidity has been grabbed. Then comes a fast move up leading to break of structure. Okay. Yeah, no, so these are my confirmations here. And institutional candle. Yeah, I agree with, I'd like to see that last up candle that's gonna take out a high right, before the move down that created a new low in the case of sells. And then in the case of buys, it's usually that last down candle that took out a low before creating a new high, right? And so in this case here, this was our institutional candle, right? Because this candle pumped up above these highs, and then we saw price short off. So what we got to understand is happening here when this happens is if all of these buys are getting triggered here in the form of buy stops or in the form of people who were selling, they're getting their stop loss hit, right? That's a buy order, right? If all of these buys are getting triggered, then why doesn't the market continue up? When it reverses after doing that and then gives us a break of a new low, that's usually a sign that they've gotten into the market and we're wanting to see them come back to this area to mitigate their buy positions that was artificial just to pump price above liquidity, right? So it's either got to do that, or for me, it's just got to be sitting inside of an imbalance. And in this case, this was doing both, right? Because, right, imbalance is just another form of liquidity. This was a 4-hour range, so I looked at a 2-hour. Right, and that was my area there. Let me see. Higher time frame. He wants some better context about higher time frame to lower time frame. So higher time frame to lower time frame. Yeah, so pretty much with that, well, higher time frame as far as like how high of a time frame? Like 4-hour, which to me is like still kind of like intraday-ish, but can be high time frame, or like daily, weekly type of high time frame. Let me see. Why is it that the market sometimes stops right before liquidity and reverses instead of taking it straight? Because liquidity can be in the bodies as well, right? Liquidity doesn't just have to be in the wicks. So price can, come to the bodies. So like when I was looking at this was my internal liquidity here, right? And it didn't take this high necessarily, right? So for me, I look at the bodies also as a form of liquidity. I think UChef might have an example of that as well. Was it UChef? I'm not sure. But yeah, so this is kind of an example of that because it's like if you think about it, a lot of times when people place a trade, if the wick is too long or, too many pips for them, then they're like, okay, I'll just put my stop here above the body, right? Or below the body instead of doing it above the wick or below the wick. So it can capture bodies as liquidity or it can capture wicks as liquidity. From daily, weekly. So, I mean, when it comes to like a daily, weekly, what's been in a nice, I mean, gold was in a nice daily, weekly. But yeah, when it comes to like daily, weekly, you're pretty much wanting to see more of a 4-hour break. For myself, daily, a 1-hour break can be fine. But when it comes to the weekly, I typically am wanting to see a 4-hour break You know, we can play off of a 1 hour break, and that's probably the lowest time frame that I would want to go. Yeah, that's the lowest time frame I'd want to go when we're dealing with a range that high of a time frame, right? So like when we got this here, right, it was like I waited on the 4 hour for us to break structure, you know, before really attempting buys. Now we did get a 1 hour breakdown in here, but it just swept the low. Right. And that's because it's going all against this massive selling pressure. You know, the 1 hour break inside of something like a daily area is a bit more riskier. So I rather just wait for the 4 hour when we're dealing with, you know, weekly area especially, but daily areas too. But you know, you can get 1 hour clean 1 hour breaks inside of a daily area. But like 1 hour, 4 hour is what I would wait for. And then from there, once you do that, right, once you actually break it down to a 1 hour, 4 hour, and you get your area for there, then you could break it down again even more and you look for the same thing. Right. And that's why, you know, I'm saying like UCAT is just like that perfect fractal. Because, you know, despite whatever time frame this is, like this could be a daily, this could be a weekly. It's all the same thing, right? We're all just, you know, just looking at candles. So like if this were like a daily, then all of this here would be like 4 hour breaks, right? I'd go one time frame down and it would probably look like this on a 4 hour. I'd probably find an example. Higher time frame on USD CAD. Right, like we had this happen. Okay. That's more so based on like a 4 hour time frame though. So trying to find one based on a daily. It's probably not gonna let me go that far back. Well, like even this here, you know, like when we had this, we came down into this daily candle, this daily point of interest. It's like this here gave you a bounce, and this would have been a nice scalp, right? But like that point of interest that I just drew was based off of a daily, right? And so like, you know, this would have gave you a nice scalp if you were waiting for like a 15-minute break of structure. But it ultimately came and ended up sweeping that because we would want a higher time frame break than like a 15-minute. But that's when the 15 minutes started counter trending, and it gave some buying opportunities all throughout here. And these are good moves there, but the real move didn't come until we got that 1 hour break. Right. So when this happened, none of that was a 1 hour break of structure. Right. This was all just one hour pullback. Then we made a lower low, then a 1 hour lower high, then lower low. Once we broke on that there, you know. So that's what I wait for. And then once you have that, you can take it to an even smaller time frame if you want to. Let me see. I often catch myself missing a move for a few pips of below my entry. Yeah, that's the worst, man. That to me used to happen all the time whenever I would try to enter on the bodies of an institutional candle. And so that's when I just started playing the wicks of my institutional candle so that I make sure it gets me in. And you also want to account for spread, so like something like this, if you would have played the body, you would have been Gucci. But I'm sure I can find plenty of instances where it's like just never got to the body. So I don't know if that's what you're doing. If so, I would say try that out. And if not, then I would say what you want to do is account for spread when you're buying, right? You want to account for spread when you're buying. See if I can find a buying example to make sure it gets you in that setup. Yeah, no, that one got to the body. Okay, yeah, so like this here came to this last down candle, but it did not get to the body, came to the wick. So like that can happen a lot. And so I used to miss trades like that. Go on Aussie. So like kind of like Aussie right now, where it's at, to me, this is based on a range that's based on a daily. And so because it's such a high time frame range and it's like we'd be going against all of this momentum, I would prefer to see a break of structure based on a 1 hour time frame to be confident in shorting that. If not, I would think it's just going to keep running to take out those highs. Right. But if it did something like this, because this is a valid 1 hour for myself. If we did something like that, then I would anticipate that this is going to come lower, right? Into actually make a lower low because this is a bearish range based on a daily time frame for myself. So if we look at Aussie, I wonder if it's gonna let me go that far back. Where is it? Not this one. Was it this one? Okay, let me see this on a weekly. Okay, yeah, I think it was this one. So we have this like weekly doji here, but it's giving bullish volume. So, I would count that. And so back here, this, I was looking at it like this. Okay. All right, because this is a valid daily for me. So I was looking at it like that. Okay. And if I go on the 1 hour, if it's gonna let me go that far back. 12-hour. Find my institutional. So I was wanting it to come to this imbalance fill here. So this is pretty much what I was wanting to see. Well, no, this is a counter trend. So this actually did not do that. And let me check this 4 hour. All right. So for me, when this happened, this is what made the sell like probable. Okay. No, that's from a different one. Because if we look at this here, this is a valid 1 hour. And we came below that. All right. And there was this. And so it gave a move. But the reason why I wait for that is because whenever we're basing it off of a 1 hour or 4 hour range and we get a break or we get a trend continuation, a lot of the time, just because you're on the side of the intraday trend, you should get some type of move or some type of bounce. And so, this one ended up doing that, but, it ended up continuing to take out this high. But let's say if we would have, let me see, did it give a 15-minute? No, I didn't give a 15-minute break of structure. This is like a 5-minute break of structure here. I know it's not going to let me go this far back on the 5-minute, but like waiting for the 5-minute break of structure, you would have got this type of move, but then, it would have did that to spike that out. So yeah, if we're of a high enough time frame, I just don't really like to depend on those 5-minute breaks, especially not a 1-minute break, and really not even a 15-minute break, preferably like a 1 hour. Or that's a good example there. I remember this. This was a clean move. I thought it was gonna die from there, but so Aussie kind of what I'm looking for in there if it does that. See, you don't have Euro USD on your list. Is there a reason for it? I just don't like Euro USD. I think GBP USD is better. So, I take a look at that. But Euro's been clean lately, it's been doing what I would look for on some things. But like stuff like this is, Euro's doing too much when it comes to stuff like that. Let me check this out. Daily 4 hour. Oh no, I guess that's fine because the range would have been here. So I guess that's fine. But no, I just don't like Euro. But yeah, this was clean though. This over here after we made this higher high based on the 4 hour, and then we saw a price do this and break down and come into here. All right, 15-minute break of structure. So that was really super, super clean. And then, what it gave here today was pretty clean as well. So, that was nice too. So, I mean, yeah, Euro's been clean lately while it's been doing this uptrend. But I'm just not a fan of Euro. I don't like when Euro does stuff like this. But all of this in here was I'm not gonna lie, all of this in here was really clean. So, maybe Euros, Maybe she not as crazy no more. But GU, come on, man. Like, look at that right there. Like, you can't. How could you be mad at her? You know, like, look at GU. Oof, my goodness. That's beautiful right there. So I'm a GU fan over a EU fan. But yeah, I mean, it's all, it all works with the same with everything. I just am more of a mitigation type of setup guy. That's what I like. And EU likes to do liquidity sweeps sometimes, a lot of times. And it could just, go off of a liquidity sweep and not mitigate out of anything. And that's just not the setup that I look for. I like these mitigation type of plays. Yeah, no, definitely, man. It's been some good snipes on there. I know Siva messes with EU. I think Jordan messes with EU too. So, definitely there's some good plays on there. Mm-mm-mm. Are you familiar with the concepts of banks creating imbalances from an M or a W? I mean, I don't think it's created from M's or W's, but you can see imbalances around M's and W's. But shoot, a long time ago when I was learning how to trade, there was this like market maker method, and they used to talk about M's and W's. So that was a thing back then. You know, but imbalances themselves are not created from the pattern. Imbalances are created when we have a volatile move and a slip in price, if you will, where buyers don't get a chance to really be buyers or sellers don't get a chance to really be sellers, right? So where we'll have a lack of buying or selling volume inside of a move. So like something like this. Oh shit, I didn't mean to fucking do that. Let me see.
You want to have the
There we
fixed
go.
volume for the price range? Yeah.
Yeah, there we go.
To tap into the question a little bit, there's an educator exactly trading with the visual range profile, and his entry confirmations are like, I think you guys in Trade Out House call it type 1 or type 2 accumulation distribution. You know them two things Matt has tattooed on his hands?
Yeah, man. Wyckoff. I mean, that's what structure really is. Like when we're getting this change in structure, like this is a distribution happening. But at the same time, this whole thing here is also a distribution happening. So we have a distribution happening here, and then inside the point of interest of that distribution, we have a distribution happening here. And then inside the point of interest of that distribution, we have a distribution here, right? And that's what we mean by fractal. Like this here is a schematic number 1, where you get that buyer's climax, that upthrust after distribution. So that one did a schematic number 1, but this here is a schematic number 2. I mean, I guess one could look at this still as a schematic number 1, and this be your updraft after distribution if you're looking at this as your buyer's climax. But I'm personally let me see. This one here is where we have the most volume. But yeah, to me, this would all be like a buyer's climax. And then we have this, and that's like my upthrust. So I'm seeing this more of a schematic number 2. And this one here is definitely a schematic number 2. All right. But yeah, that's all that is. It's just, to me, the only issue with Wyckoff is, how do I know if this is the upthrust after distribution and not a trend continuation? And then this is the up thrust after distribution to then do that. Right. And so that's why I'm really just keen on watching the structure because, well, you know, this is probably your buyer's climax, your up thrust after distribution. If after this, we then get the break and then it comes back and it tests. Right. And so then it's like, okay, here's my whole distro. But, you know, volumes and stuff like that can help you see that stuff beforehand if you're in an area that makes sense to see some distributing or accumulating. But let me see here.
I have to just tap in because you said volume. On what, like, I mean, you could put the volume right on any type of consolidation after every up thrust, right? And could say, okay, now it's gonna react because this is happening to me a lot. That I'm too early on the move. Because I think, okay, this volume, it's gonna react now, and I place my sell limit or buy limit. On how big of a consolidation or on what time frame you usually put the volume to see your point of control or volume peak point.
I'm just looking for volumes to decrease as we come into the range.
Okay.
So, you know, like I'll look at it on all time frames, you know. But yeah, that's what I'm waiting for. So like as we come up into here, we're gonna have some type of climax, and then we're gonna just start to see the volume going off. And so like when we get in here, all that does is just it gives me extra confirmation and confidence on the area. And I'm also using volumes sometimes to take profits, right? Like if we make a new low and it has weak volume and then we start accumulating or breaking structure. In this case, this didn't really give us an example of that. But like if we made a new low and we had weak volume and then we broke structure, then I would see that as a reason to pretty much TP. And so it's really using it with the structure. It's like if I'm in a bearish range and I'm coming into an area that I'm anticipating selling, or I'm coming into an area that I'm anticipating buying, I'm wanting to see the people that are opposing my bias. I'm wanting to see them get weaker, right? Let me find a good example.
And while he's searching, guys, if you have any more questions, use this time. You know, you're talking to somebody who's been trading since most of you probably never heard of trading before. You know, 8 years in the pocket here, one of the OGs at IM. So ask whatever you can.
No, definitely, guys. You know, this is the time for sure. Um, you know, because I know for me, it's like I can watch a bunch of videos, but then even after I watch those videos, it's like, okay, some of my questions have been answered from the video, but it's also maybe brought up more questions, you know. And so like just really having that hands-on where you can ask questions. And that's what makes Go Live elite, right? But where you can ask questions, it's like that's how I personally really learn. But like this is an example here, which is why if you were on the stream this day, it's like I was trying to buy gold, but it ended up hitting us out based on the smaller time frame entry, but the 1 hour range maintained. And so some people were able to catch that. But it's like we're already in a bullish range. And so as we're coming to my area, I just want to see the volumes for sellers. I want to see them start to get weaker because it's like I'm a buyer, so I don't want sellers to be super strong. You know, I'm wanting to see them get weaker as we come down into the area. Right, we can see sellers got weaker as we are approaching into this area where we're anticipating buying. Cool. Internal, external liquidity. Yeah, no, definitely. So let me see. So internal and external liquidity is just when you have a range and understanding that a range is just two pricing points. Once you do this, now you've boxed price into a range, right? And so now really everything outside of that range is not as important. So when I'm looking for internal liquidity, I'm usually wanting it to be inside of a range, typically my fib range. Okay. And so a lot of times what we can do is we can create liquidity on the way down, right? Early buyers come in, we take them out. Or we can have liquidity. So once we come out the range and we start pulling back, well, now we have a new range. Okay. So what we also can do is we can come and take any liquidity that was already inside of this range. So this would be internal. This sweep here would be internal. This sweep here would be internal. When we come for the highs, that's external. All right, so this is liquidity on the top side because there's always going to be buyers and sellers, right? There's people that are selling this anticipating that price is going to continue to drop, right? And then there's people that are holding this buy anticipating that price is going to continue to go up. So they come and they take out the buyers, right? Then they take out the sellers. So this would be an external liquidity sweep. For everyone that was trading this double top or this M formation or this triple top with their stops above the high, anticipating that price should continue lower, they take them out. Or we can also do a mixture of both of these. So this one, our internal liquidity was created on the way down into the range. This one, we already had internal liquidity inside of this range. So once we make a new high, right, this is now our new range of where we started to retrace from. So we can come down, we could already have liquidity in the range, and we can also create more liquidity. So we create more liquidity, right? People trading this double bottom or this type of support pattern or whatever, right? And then also people trading this double top or maybe seeing this as a head and shoulders. So we take them out. People that are trading the head and shoulders, waiting for the retest of the neckline, stop loss above the shoulder or above the head. All right, we take out the buyers and then we take out the sellers. So this would be external liquidity. So external is just we're coming out of the range. Internal liquidity is we're coming into the range. So I hope that makes sense. Yeah, pip talk. I should be having a pip talk in like the next couple of weeks or so. So definitely. Yeah, definitely. You guys can catch me on Go Live. I am live on Mondays at 11:30 Eastern. I'm live on the next time I'll be live is this Sunday for Sniper Sundays. That's at 12:30 p.m. Eastern. Then it's Monday at 11:30 a.m. Eastern, and Thursday at 2:30 p.m. Eastern. And then Friday, which was today, we had a session at 10 a.m. Eastern. So that's when I do my sessions. You guys can definitely catch me on Go Live. You can go over to the TBX channel, and you should be able to see my times, and you should be able to translate it to your time through Go Live. So
Yeah, it shows the Central European time.
okay, perfect. But that's all the questions. That's really gonna be it for me. My trading mentor, I would say Jordan. You know, Jordan's taught me a lot of stuff. We don't exactly look at market structure the same. You know, I have all these rules and stuff. But yeah, Jordan's taught me a lot. Jordan's definitely my mentor. You know, Zach has been a mentor of mine when it comes to cryptocurrency. But everything else was just from back testing, like all the rules and stuff that I've made and created around market structure and like these steps and stuff. You know, I think in a systematic type of way. So I'm always trying to think of like, okay, how can I put this in a system that could make it efficient for other people to understand? So like we all use the same stuff, you know, institutional candles, liquidity, you know, imbalances, market structure, Wyckoff. Um, I just take a more type of systematic approach. And you don't have to be that rigid, you know. I just am. You know, you could, you know, some things, you know, with between the educators is like we could see things a little differently. But for the most part, it's like we all see everything the same when it comes to what we're looking at a lot of the times. But for me, market structure is just the most important thing. You know, to me, everything else submits to that because I see a lot of liquidity left, a lot of imbalance left, right? A lot of institutional candles not traded to, you know, or blown through, right? Because of market structure, right? It's like we get that market structure, everything now is just boxed inside of a range. And to me, like that's the most important thing. I don't know if he looks at it as the most important thing. I think he really likes Wyckoff, you know, because seeing that accumulation and distribution in the moment, you know, that's how I enter all my stuff. So, you know, we're really similar there, the smaller time frame entries and just the point of interest areas that we look at. So like, yeah, Jordan has been my mentor when it comes to that. And Zach's been my mentor when it comes to cryptocurrency stuff, because he knows a lot of stuff when it comes to cryptocurrency, man. So, you know, definitely. And, you know, of course, all the people that I've just looked at over the years, you know, Mark Douglas has been a big help, you know, Mark Douglas for sure going through his stuff is something that really helped me. If I can give a trading tip to beginners, it would be to keep track of your trades as soon as possible and learn the psychology as soon as possible. You know, like it's good to study the technicals, but you guys need to be studying the actual psychology of trading, you know. And I can drop some links to Geo so he can send to y'all for sure. But definitely I think that's really important. Starting early there, because I know when I started in my journey, you know, I wasn't focused on any of that. I was just trying to figure out, yo, how do I make money doing this? You know. So definitely I would recommend that. For me, I take notes on everything. So someone says, "What do you have in your trading journal?" I just take notes on things that I see multiple times. And what I've optimized is like you always want to continue to optimize because the market changes. All right, the market definitely changes. And so I try to look over, just let me pull this up here. You know, I pay attention to the time of day that I entered. You know, I pay attention to what technical signal got me in, as far as like what were all my confirmations on that particular trade. Right, what my target was, right, when I went break even, all of those things. I'm trying to pull this up for y'all real quick. You know, just to show. So I take notes on like a lot of stuff, you know, it's a lot of stuff, even like separate notes on DXY, indices, Bitcoin and ETH, because they're all a little bit different, even though they're the same. And then these are like my notes on news events and stuff like that. So, you know, I know everything. And I didn't always do this in my trading, but I definitely can say that I wish I would have started doing that a lot sooner in my trading. So that's definitely something that I would recommend. You know, that and studying the psychology, you know, studying Mark Douglas, definitely studying Mark Douglas's stuff. I'll send those links over to him. But yeah, that's gonna be it for myself. I gotta head out here. Definitely, yo, Gio, appreciate you for, you know, going ahead and arranging the call. You know, definitely we could do this sometime again. You know, that we've all gotten connected. I'm down for sure. And you know, let's run it. Let's run it. I don't
That's
know if
good,
y'all
bro. Thank you, man. Thank you, man. I think I speak for everyone who was on the call. Really appreciate your time, your value, everything. So yeah,
Appreciate it. Thank you for your time, man. It was really amazing. A lot of value shared. And then let's get together another time. And then this time we talk about the flyer picture before. But
Nah,
thanks for
that's
your
a
value,
fact.
bro.
Nah, no problem, man. Let's get it. Peace.
thank you.